Crude oil is one of the more exciting markets that we trade. It can be responsible for a larger percentage of our gains or losses. And take a look at a strategy for trading the weekly rig count. Now the rig count typically comes out on Tuesdays at 4:30 Eastern time. This week it came out on Wednesday, so because of the July 4th holiday, so there are some days when it can come out on Tuesdays and other days when it comes out on Wednesdays. And I want to show you, here is the price action. Very volatile, very fast moving market. It went down about 50 points and then it popped up, and then you see the price action after that, hit a profit target. And here is the performance summary. I'm going to show you, this is actually our crude oil after hours trading system from the book algorithmictradingsystems.com. It's not in the book, but it's in the members area. So when you purchase this, the members area for this book on algorithmictradingsystems.com, you get the crude oil after hours strategy, the open code for TradeStation, MultiCharts, and NinjaTrader. You can order the open code for this right here. Here is the performance summary for this going back 4 years, and you simply change one input from our original strategy. To take a look at the inputs, we go Format Strategies, and you see here this is typically set to, the start time is typically set to 14:30 because 14:30 is when the crude oil market closes, and there can be some moves from the time the day session closes until the 24-hour session ends at 1700. But in order to catch this report that is released at 14:30, we change this small window from 1630 to 1700. We use all the same input parameters that we did before, and we take a look at the result. And here are the results with slippage and commission. So before slippage and commission, this number is about $120. Here is the equity curve. So nice equity curve going back 4 years. And again, this is basically crude oil after hours, and we're only focused on the last 30 minutes. And this does a good job of capturing any moves that happen in the last 30 minutes. Now the rig count comes out Tuesdays, but it can also come out on Wednesdays if there's a holiday. So what happens if we change the code to only trade on Tuesdays or Wednesdays? And I'm going to show you how to do that next. So when you get the code from the members area, you'll see the open code, and in TradeStation, all you have to do is add this condition, and day of week of date equals 2, or day of week of date equals 3. And you want to put those in parentheses. You want to add those to the current conditions for the longs and the shorts. You can do it like this, actually. And so 2 is Tuesday, 3 is Wednesday, and you can add that to the long and short entry conditions. If you have NinjaTrader, you can see how we do it in the weekly inventories report. We have a similar approach in the crude oil weekly inventories, because weekly inventories can come out on Wednesday, and if there's a holiday, it comes out on Thursday. So you see how you add specific days of the week in the weekly inventories, and you just do the same thing except you go Tuesday, Wednesday instead of Wednesday, Thursday. Now I'm going to show you the results. This improves the results of the code when I change it in the easy language, and I'm going to change that in the easy language and then show you the results. So I updated the code for those rules, and you reduce the trades by about 40 trades. So it only trades on Tuesdays and Wednesdays. It's possible that some of those Wednesday trades may not be related to the rig count, because if it's not a holiday and it trades on Tuesday at that hour, it can still also trade on Wednesday with that basic rule set. But you still have a really nice strategy here with $120.75 average trade profit, and that's including $25 round turn slippage and commission. So you'd be at 145, 28.10 drawdown instead of 31.35, and you get about $700 more net profit. And here you have a nice equity curve going back 4 years, and that it's a strategy that I really like. Strategy that you could trade. Crude oil after hours has been a bit choppy on Mondays, Thursdays, and Fridays, especially if you start trading at 2:30. But this works a little better. It trades less, and it has better average trade profit and a better equity curve, and it goes back. It has a longer track record, 4 years hypothetically speaking. This is a new observation, brand new observation based on yesterday's rig count. There can be a lot of slippage around this, but I find that if you set it at 1430, the way the code is written, it won't trade on the volatile bar. The very next minute is very volatile, and so we got a lot of slippage on that yesterday. And so for example, if the time is greater than 1630 is what it says. So if the time it's on this bar, then it works the next bar based on the close of the 1630. So it skips this 1 minute volatile bar. It doesn't do what it did yesterday where it starts trading at 1430 and it gets slammed in both directions with slippage. And so on this one, crude oil really can be really volatile on that first minute. On weekly inventories, our weekly inventory skips this first bar. It skips the first volatile bar. And so now with this rig count strategy specifically designed for rig count, it would do the same thing. It would skip the most volatile bar that comes out and gives the slippage, and would take the trade on the next bar and give you less slippage, even negative slippage in some cases. Negative slippage is when you get filled at a better price. And so again, this is a strategy to take a look at to boost the hypothetical average trade profit and then the executional average trade profit versus at crude oil after hours, because you're not already bracketing the market. When this comes up, you're waiting for the event 1 minute after the event to occur before you take this trade. And so hope it helps. Let me know.